Hello everyone. So in this video, we will discuss 2017 question paper. Following is the balance sheet of Excel Limited as at 31st March 2017. Particulars rupees. They have given particular balance sheet. Equity and liabilities. Equity share capital 40,000 shares of rupees 10 each. So 40,000 into 10, 4 lakh. 15% preferential capital 2,000 into 100 rupees 2 lakh. Okay. Next. 12% debenture. Now please remember these two are liabilities. 12% debenture we have 1,50,000. Creditors 1,25,000. Totally we have 8,75,000. Assets, land and building 3 lakh, plant and machinery 2 lakh 50, stock 1 lakh, debtors 75,000, bank 10,000, and P&L account 1 lakh 10,000. Look at here, this is a accumulated what is it? A loss we have, accumulated loss we have, or fictitious that you can call. Okay, totally we have 8,75,000. Now, this is balance sheet relating to Excel Limited. Okay, Fortune Limited acquires the business of Excel Limited. Now look at here, we have new company. So Excel is vendor company. Excel is vendor company, and Fortune is purchasing company, and agrees to take over only fixed assets. Look at here, these two are fixed assets. These two are fixed assets, and a 12% debenture. So they agree to take over only fixed assets and only 12% debentures. Look at here, when it comes to what is it, merger, all assets should be taken over, but here they're taking over only a fixed assets and one liability. So it is not a merger, it is purchase method. It is not a merger, it is purchase method. Fortune Limited acquires the business. Okay, they have given, and discharge the purchase consideration as under. Now they have given discharge of PC. Issue of 15,000 equity shares of rupees 10 each to preference shareholders in full settlement. Look at here, total preferential capital, how much we have? Total preferential capital we have 2,000 shares of rupees, under which we have 2 lakh. But whereas they are issuing how much? 15,000 equity shares of rupees 10 each to preferential shareholders in full settlement. 15,000 to 10 is how much? 1,50,000. Preferential capital is 2 lakh, whereas they are paying only 1,50,000. This adjustment we will discuss later. Okay. Next, issue of 13,000 equity shares of rupees 10 each to equity shareholders and payment of cash for the balance. Look at here, for preference shareholders they have clearly given the information, whereas here issue of 35,000 equity shares of rupees 10 each. 35,000 to 10 is 3,50,000. Fine, we can calculate, but many students will think that it is a net payment method. No, and payment of cash for the balance. Look at here, they have given this adjustment. So if you know only PC, then only we'll get to know what is the balance amount to be paid in cash. Correct now? So it cannot be net payment method. We'll discuss later. The land and building and plant and machinery are valued at rupees 5 lakhs. Look at the book value is 5 lakh, 33 lakh and 2 lakh 50, but the market value is how much? 5 lakh 75,000, 1 lakh 45,000 respectively. Excel Limited, see they have not given about debenture, then you have to take book value only. Book value is 1 lakh 50,000. They don't give debenture information. Excel Limited realized stock and debtors. Look at here, stock and debtors 75,000 and 65,000 respectively, and discharge creditors at 10% below. See, this Excel Limited vendor company itself selling stock and realizing debtors, and they're paying 10% less than the discount of creditors. Liquidation expenses of Excel Limited amounted to rupees 12,500. The total liquidation expenses how much? 12,500. You are required to prepare realization account, fortune account, bank account, preference shareholders account, equity shareholders account in the books of Excel Limited, and pass necessary journal entries in the books of Fortune. Look at here, all these ledger accounts will be done in the Excel Limited, in the books of Excel, that is vendor company, but incorporation entries will be recorded in the books of Fortune Limited. Now, it is clear that the method of amalgamation is amalgamation nature of merger, because they have given this information. What is it? Only few assets are taken over. Okay, they are taking over only fixed assets and debentures. So it is clear that it is amalgamation nature of purchase. And I have told you, while PC, it is not lump sum and it is not a net payment also, because they have used payment of cash for the balance. That means when we know only PC, then only we'll get to know what is the balance amount. So it cannot be net payment. Then it should be net asset. So what is the net asset method formula? Assets taken over. So look at here, only assets taken over at agreed value minus liabilities taken over at agreed value. Now, in this question, they're taking over only two assets, land and building and plant and machinery. And what are the agreed values? 5,75,000 plus 1,45,000. And they're taking over only liabilities. They are not given paid amount, so you have to take book value. So PC, calculation of PC, net asset method. Okay, assets taken over 5 lakh 75, 1 lakh 45. So it will be 7 lakh 20. Liabilities taken over. I have told you when they don't give any information, you have to take it as 1 lakh 50,000 book value only. So 1 lakh 50,000. Now, if you minus, then the PC will be how much? 5 lakh 70,000. The total PC is how much? 5 lakh 70,000. Now, discharge of PC. See, discharge of PC, they're issuing 2 preference shareholders. They're issuing 15,000 equity shares of rupees 10 each. 15,000 to 10 is how much? 1 lakh 50,000. And 2 equity shareholders account, they're issuing, look at here, this PC. 2 preference shareholders they have given. And 2 equity shareholders, they are issuing 35,000 equity shares of rupees 10 each. 35,000 to 10 is how much? 3,50,000. And balance is being paid in cash. So 5 lakh 70, 1 lakh 5 lakh 70 minus 1 lakh 50 minus 3 lakh 50. If you do, we'll get 70,000. Balance being paid in cash to equity shareholders. This is nothing but discharge of PC. Third one is what? Preparation of realization account. Okay, ledger accounts you need to prepare. I've already told you that. Please keep it in mind. When you are preparing realization accounts, whether assets are taken over or not, compulsorily you have to debit all assets at book value. Please don't take market value. You have to record only at book value. Now look at here. You have these many assets. Okay, these many assets we have. So you have to record these. So record at book value. So the same answer is given here. Look at here, land and building, plant and machinery, stock, debtors, and see, if you want, you can take bank account, or you can just ignore. It's left to you. Okay, they're not taken bank account here. You can take bank account. Don't worry. Okay, so they have taken only 4 assets here. If you want, you can take bank account also. No issues. Okay, so they have taken 4 accounts. So they have taken only these 4. If you want, you can take bank account. No issues. Okay, so 3 lakh, 2 lakh 50, and 1 lakh 75,000. They have taken. So same has been recorded here, and they are taking they are taking all liabilities. Look at your debenture 1 lakh 50 and creditors 1 lakh 25,000 as per the balance sheet values. Look at the creditors amount is how much? 1 lakh 25,000. Next, what they have given. See, they are taking only 2 assets, correct now, and stock and debtors has been realized for how much amount? 75,000 and 75,000, 65,000. I have told you, you are going to debit assets. Look at your debited assets. If these assets are not taken over, then you are going to realize. So what you have to do? By bank account, stock realize 75,000. By debtors, debtors realize 65,000. And creditors amount is there. Creditors amount is how much? 1 lakh 25,000. So they're going to pay 10% less. So to bank account, 1 lakh 25,000 minus 10%. It is 10%. Okay. If you do, how much you'll get? It's not 5%. Please change the value. It is 1,12,500. And we have realization expenses. Realization expense, how much we have? 12,500. We have liquidation expenses. We have 12,500 that need to be debited. Okay. By to bank account. Sorry, you have to debit to bank account within bracket realization expenses paid. Okay, we are done with that. Business purchase account, always you need to credit. By business purchase account, what is the PC amount we have? 5,70,000 we have, that you need to debit. Now I have told you, look at here, the total preferential capital is how much? Preferential capital, whenever you get preferential capital, you have to verify this one. Total preferential capital is how much? 2 lakh. And how much you are paying? Two preferential holders, how much you are paying? Only 1,50,000. You're paying only 1,50,000. So that means you're paying 50,000 less. See, when you're paying less amount, you have to show credit side by preference shareholders account. But when you're paying premium, you have to show here to preference shareholders account, to premium preference shareholders account. Now we have written all the items, and we have written all the items. So which side will be more? Credit side will be more, 10,35,000. If you minus all these items, okay, then we will get 1,85,000. 1,85,000 will get, that is to equity shareholders account. After preparing realization account, you can directly go to Fortune Limited account. Okay, now Fortune Limited account. Fortune Limited account. Look at here, the account has been created here. The account has been Fortune Limited account has been created in realization account. That means realization account will be debited in Fortune Limited account. So to realization account 5,70,000, and please remember here, look at the discharge of PC. Look at the discharge of PC. See, for preference shareholders also you are issuing equity shares, and for equity shares also you are issuing equity shares. So by equity share capital, how much we will get? 5 lakh, and by cash 70,000. By equity share capital account 5 lakh, and by cash account, sorry, by cash at bank account 70,000 you will get. So it will be 5 lakh 70, 5 lakh 70. We are done with, what is it, Fortune Limited account. Next we can go to preference shareholders account. Okay, now preference shareholders account, when you're preparing, first you have to bring down preference share capital, which is there in the balance sheet. Look at here, what is the preference share capital we have in the balance sheet? Preference share capital we have 2 lakh. By preference share capital you have to bring down. So after that, for them, you are issuing 15,000 equity shares of rupees 10 each in Fortune Limited. So 2 equity shares in Fortune Limited account, 1,50,000. And look at here, in realization account we have shown here preference shareholders account 50,000. So the same amount, that means realization account should be debited in preference shareholders account. So by, sorry, it's not by 2 realization account 50,000. So it will be totally 2 lakh each. We are done with, what is it? Equity, sorry, preference shareholders account. Next we need to go for equity shareholders, equity shares in Fortune Limited account. So equity shares in Fortune Limited account, look at the Fortune Limited account. In Fortune Limited account, equity shares account has been created. That means Fortune Limited account will be debited in equity shares account to Fortune Limited account 3,50,000, and that will be paid to whom? By equity shares account 3,50,000. Next one, the last account which you have to prepare is equity shares account. So when you are preparing equity shares account, first you need to bring down, what is it? Share capital. You have to bring share capital and also equity share capital and also reserve surplus. Look at here, we don't have any reserve surplus, ignore. Done. By equity share capital you have to write. And look at any fictitious set. Look at here, we have P&L account. So when you are bringing from left hand liability side, you have to credit. When you are bringing from asset side, you have to debit. So to P&L account, look at here, by share capital 4 lakh, to P&L account 1,40,000. Now here we have got profit 1,85,000. So you have to write by profit 1,85,000. Okay, and here see, actually you have to take cash account, bank account you need to take. They are not taken. You please take bank account. Then here you will get difference amount. So if you take bank account, your answer will be tallied, no problem. Okay. Here, so by 2 equity shares account like 50,000, 2 cash account 70,000. So if you take this cash account here, then our answer will be correct here. Okay. Now I'll show you the difference. Okay, what you need to do, you have to write 2 equity share capital account, 2 cash or bank account, 70,000 will get. So if you take, what is it, cash account in the realization account, then you will get, your answer will be correct. I hope the concept is clear. Here we are done with all the ledger accounts. Now we have to pass incorporation entries. Simple. So always it should be recorded in the purchasing company. So business purchase account debtor 5,70,000. 2 liquidators of Excel Limited 5,70,000 in purchase consideration due. And when you're passing second incorporation entries, please keep it in mind. See, you have to take only assets taken over. Land and building, the two market grade value 5,75,000. Building 1,45,000. and 12% they are taking over only debenture 1,50,000 and business purchase account 5,70,000. Look at here both debit side and credit side will be same. Okay, that means no goodwill or no capital reserve. And third one is buy liquidators of Excel Limited account 5,70,000. See here also they have done mistake. 2 equity share capital account 5 lakh. They were given separately. Please correct this one. 2 equity share capital account 5 lakh, no preferential capital, and 2 are cash bank account 70,000 being purchase consideration paid. Here we don't have any discharge of debentures or creditors. So that creditors we have that is shown in realization account. So we are done with what is it? Closing ledger accounts and also incorporation entries, which has been asked in 2017 for 14 marks. I hope the concept is clear. If you have any doubt, please don't forget to text me. Thank you.